Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you guys. Good to be with you this morning. We just got the release for the personal income, personal spending, all coming in at or better than expectations. So personal income went up or held pat at 0.5%, nice upward revision to the previous month. Same on spending. We're actually up 0.9 versus expectations for 0.7. Core PCE, the Fed's preferred gauge for inflation. Yesterday, we got the final read on the first quarter quarterly print. Here's the year-on-year coming in right in line with expectations at 1.2%. Broadly speaking, you're seeing a mixed performance here on the dollar. It's weaker against the Aussie, obviously the biggest performer on the session with a gain of 0.36%. Kiwi 0.23. We're holding a long position on that. We'll go over in a moment. And the yen as well. We took a position on that yesterday. That's up 0.13%. Biggest loser on the session, obviously, Swiss franc down about half of a percentage point or 0.6%. So let's jump right into the charts. Here's what the dollar looks like to start off this session. And guys, I actually took some photos yesterday, and we'll go over some of the scalps that we took yesterday. I got a great email. Ty, are you in the room? Yeah, you are. Hey, Ty, I got your email yesterday. I appreciate you taking the time to write to me, man. I'm first of all, I do want to just say I'll be giving you a response via email. I just want to go over some of the stuff here in the room because I think some of your questions are pretty pertinent for what other people are looking at as well. And we will go over some of those questions that you had as well. So for the dollar index, it's been a pretty textbook play here, guys. 11,887, 11,880, key range that we've been looking at since the start of the month. It was the opening range low. It was the break that put us bearish here on the 10th. It was the pre-FOMC swing high that we made before the collapse into that key support zone, and it's exactly what caught the highs yesterday. You're looking at that swing high from the 17th, the 38.2 retracement of the advance, and this level right here represents not only the high stretch that you made for the February open, but also pretty close to those peak lows you made in March. So the dollar remains at risk below this key region as long as this region holds resistance. Our game plan is unchanged. A break above that near term is going to invalidate the short side. In such a scenario, we'd look for a play into the upper median line parallel. But as it stands right now, that's the key resistance that we're looking for on the index. Any questions on the dollar index? Here's what it looks like on the 30-minute chart. First of all, Mark, good morning. Eileen, good morning. Thank you for that. Good to see you guys here in the room. Tom, Stephen, Raj, Shafiq, Les, Kelly. Always a pleasure. So here's what the 30-minute looks like on the dollar index. By the way, sterling yen also gave us a reaction off of that sliding parallel. We'll talk about that in a moment as well. Jam-packed schedule here today, guys. But here's the dollar index on the short term. So the levels have been exceptionally clean. Yesterday, as we were opening the webinar, we were trading right around this region. We were talking about the fact that, the dollar still might have that final stretch into a high, looking for a final stretch into a low to get long, looking for a final stretch into the Aussie to get long. The Aussie wasn't as compelling a case, in my humble opinion, as the euro was. But in any event, both of them have been lackluster. The positions that we've been in over the last 24 hours are going to be the dollar yen, Kiwi dollar. They're very interesting positioning at this point. Sterling, we took a position yesterday. We actually took a loss on that, looking to play the long side as well. But broadly speaking, the Aussie has been sort of a disappointment here. So for the dollar crosses specifically, we've shifting our attention a little bit, and I've highlighted that in yesterday's radar chart. So I hope you guys got a chance to look at that before today. All right, so again, near-term support and the same level that we were talking about yesterday, this region right here, 11,839, 11,840. And this is the region we need to play the breakout. Now, again, our favored move is going to be selling dollar rallies well below 11,880. Note a couple of things. The momentum signature has failed to push sub 40 since the start of the week. And while we have been playing broadly some weak dollar positions versus the majors, you want to trim that appetite here as you hold this near-term support and momentum holds 40. So look for a break of this dynamic. Specifically with a move below 40 to really validate the turn that we're looking for. Also, in price, we've broken out of that proposed median line formation off last week's low. Listen, it held really well, okay? It caught the high on the 23rd, the low here on the 24th. Yesterday's stretch offered a perfect opportunity. We'll take a look at the dynamics of how we jumped into that position. Again, one of the things that we were looking at when we were taking the Kiwi long, we were taking the dollar yen short, was the fact that you saw this hold here again. So the median line has been in hold on the upper and median line parallels. The median line itself has been an exceptional pivot. And then once we came into resistance, as those pairs were coming to support, adds further conviction, okay, for some of those positions. So near term, again, same game plan. One thing, Raj, we will definitely take a look at that as well, the sterling Kiwi. Remind me in a couple of minutes once we get through these majors, okay, Raj? The one thing I want to note, guys, is that I've been just trying to jot down some notes. I've been getting some great feedback from you guys, and I really appreciate it. As far as timing of the scalps, listen, a lot of the pairs have been actually panning out much better into the close of Europe. So 10:30 into 11 o'clock here in the United States. Obviously, European markets come in, close out. Last ones close out 11:30, 12 o'clock in UK. But broadly speaking, that's the time period that you've seen the nicest move. The extension of that first move into the U.S. Open continues into the close of Europe, and then we'll look to play the other side. So I'll go through that position with you in a moment. But before I move off, any questions here on the relative performance for the dollar index? Pretty key level, okay? And as long as you hold below 11,880, 11,887, this key region here, you're at risk for a little bit more of a pullback. Momentum on the daily chart at 50, holding resistance. We'll want to see that 40 level give out to the downside. And that's a near-term trigger we can keep an eye on as we head into U.S. trade. Okay, remember, I put these triggers on here, guys, not only as positions of which we'd like to enter trades, but also when you'd like to get out of a position. So if I'm in a short, let's just use this as an example, on the dollar index, I'll draw that momentum trigger as resistance. I'm not necessarily looking to take the long, but if it breaks and I'm holding short exposure, that might be an indication that we're seeing a shift in momentum. And near term, the market might move against me. Doesn't necessarily have to prompt you to get out of the position, but certainly sets that expectation. All right, for the next couple of hours, looks like we might see this pair some of the gains. And again, I'll walk you through the couple of scalps that we took last night. Okay, let's jump right into the charts. We'll do the euro and the Aussie. We'll whiz through those real quick, and then we'll jump into the dollar and the Kiwi. And then we'll jump into your questions and trade setup. So euro dollar on the daily looks like this. Okay. The median line parallel, the lower median line parallel, we didn't actually get a physical tag, but that's the level that we're trying to trade against. And if you remember back on Wednesday night, we noted that we're broadly looking, or we're generally looking for strength in, or for a low, okay, to be set here in the euro. So we're generally looking for some support. And at the end of the day, based on this median line, here's what the intraday chart looks like. And here's where we were last night. At the end of the day, we made it into that 1150 level earlier in the week. Remember that we were constructive above 1175 was the initial near-term bullish invalidation level. We got another break into that, an overnight trade, and another tag again of the 1150 region, and that has continued to hold. So the fact that we've continued to wobble off that, by the way, 1150 is going to be that swing low that we made towards the end of that second week in June, back on the 12th. Caught the lows here with a confluence of the lower median line parallel. And again, a near term, the median line off the high, almost confluence region there, caught that low. And that was this region here. So can't get on the bearish side of euro just yet. At the end of the day, if we see a topside break of the near term pitchfork structure here, and a break above, what is that, 11 or 112.50, 112.49 would be required for us to get the upside and the conviction, excuse me, tongue twisted today, guys, on the reversal here in the euro. All right. Obviously, we'll be susceptible to headlines and all this nonsense coming out of Europe, but, you know, if we've been following that, we wouldn't have been doing anything on the euro. We've been shorting it all through the rally. So at the end of the day, we want to recognize this thing's coming into some support. We haven't invalidated any major levels yet. Here's the daily look like yesterday. We're still holding that median line. And as long as that continues to hold, we'll be looking for long triggers. Very simple. If we see a break of the lows, okay, there's really nothing on tap until 110.50, 110.53, and that's going to be a key 618 retracement. So the levels haven't changed, And while it's been a lackluster trade to say the least, we've continued to hold our levels pretty well here on the euro. So looking for long triggers, looking for an opening range break to the upside, see if we can clear this median line resistance up off the highs here. And if it does, we'll look to buy pullbacks in the euro. Haven't really operated on this since the major decline that we saw there on Tuesday. So might be another wait and see story for the euro here near term. And not surprising, there's been a lot of all these headlines, despite the volatility that it creates, also shakes a lot of hands out of the trade, guys. So not surprised to see some lackluster volatility over the last couple of days. Questions on the euro? Broadly speaking, still looking for some more basing action here, and we'll see if we can get that topside break out of this formation. Near-term resistance targets to the break above 112.49, 112.50 is going to be 112.85. That's going to be the 50% retracement decline off the highs. A nice swing pivot here in price. Lows that we caught here last week on Friday, the highs that we made on this swing. And obviously the key 618 comes just above 113 into 113.20. Bear with me one sec. I just want to see what this looks like. Yeah, it's too soon. All right. Okay, moving right along. I'm going to whiz through the Aussie really quick, and then we'll jump into the juicy scalps that we're still in. Here's what the Aussie dollar looked like yesterday. It's interesting because that 76.80 level has continued to be rock solid support. Here's what the Aussie looks like near term. And here's the scalp setup we highlighted yesterday. So when we were writing this yesterday, it was actually breaking right back above 77.12, which has been a very nice pivot in price. Represents the 618 extension off the highs. You can see it's been offering some really nice pivots. Once we broke back above that, we noted yesterday that, look, the momentum signature has failed to mount 60 all week long since that Sunday open. We've unable to break 60. And as long as that condition holds, guys, you can't really validate the upside swing or the reversal in near-term trend, which has obviously been to the downside since last Friday. Here's the break, and that support at 77 continued to hold even on that last whip there. So we're continuing to respect this near-term median line formation. Again, it's too early to really put too much emphasis on this, but looks like we just got a perfect tag there. And momentum, again, we got that 60 break. As long as we hold 50, we'll be looking for those long triggers. So that target at 77.60, that confluence is no longer in play. You'd essentially be looking for a soft target now at 77.60. And the key resistance heading into New York trade would be 77.83 to 618 off the high. And there's that median line off the low. Okay, so broadly trying to stay constructive here in the Aussie while above this region here, which is now the confluence of this median line. This is a new formation I added last night, guys. By the way, on the intraday page, I'll always try to alert you if there has been any changes to the levels that we're making. So keep that in mind as far as the targets. On this level, we haven't really changed any of the levels, but the median line formation, this is a new one that we added yesterday, and seems to be describing price action a bit better than what we were using. So we'll keep that in view. And again, the median line comes right in line with that same level, 77.10, 77.12, or 11 rather. And that's what will be near term the bullish invalidation level. On the near term, here's the 5-minute chart looks like on the Aussie dollar. And I just wanted to point out that even on the 5-minute, ever since that break that we made yesterday right here, taking us back above the 77 handle, right? We have not seen there's the break right here. We have not seen, since that time period, any dips below 40 in momentum. Something to pay attention to. 40 hold, 60 break, 40 hold, 60 hold, 40 hold. Okay, we're heading into the U.S. session. Let's let that range play out. Now, you might be tempted to do something like this. I'd caution you against it. I really don't like using triggers, guys, when they're based on momentum. So the high in price is not the high that you're using as the momentum reference point. And these triggers won't typically be that fruitful for you. So I'm always going to be partial to using a high off in price. And if that doesn't give you a slope, if it's just a flat line, obviously it's not going to be operative. So probably on this type of play, this is the only one you'd be looking at. And again, this break here is not giving you a break in price. Remember, what matters is price. We're always looking for the oscillator to explain or confirm what we're seeing in price. A break in momentum with no break in price means nothing. Okay, so quick tidbit there. Any questions on the Aussie before we move on? Broadly looking higher, favoring long triggers, favoring buying pullbacks well above 77. Good morning, Michael. What about the 40 hold with a stop against the session low? Yeah, you can do that. That would work. That would work on a trigger like this, you mean? Because we held 40 again? Sure. If we had gotten this on the trigger break, let's see, probably around 38, stop against, yeah, that would work. Again, Tuttle, from the time period standpoint, I don't really like it, just from the time of where we are. But absolutely, that is a legitimate trigger. That's how I would, that'd be a perfect point, what you're making right there. As long as that 40 level continues to hold, the broader turnaround isn't there, 10 pip stop, 15 pip stop, sure, I'll take those all day long. Good eye, Tuttle. What, would that be a smaller position size trade for you? Absolutely. 100%. 100%. Right? Because you don't have confirmation that the broader turn has happened. One thing we always want to be careful about, Tuttle, is trying to call lows. It is a classic, quintessential mistake every trader will make. I was a huge, offender of that problem. Always trying to catch the low. I want to catch the entire extension of the move. I want to catch the best possible entry. Uh, markets aren't static. It doesn't work that way. So anytime that you're trying to go against the near-term trend, and I guess if we take this into a broader view of just the last couple of days, you want to be very cautious and use a smaller position size. Now, Tuttle, one thing I will say is that the Kiwi dollar position I took yesterday, again, that was a little bit heavier of a position, but that's, again, because of the risk to reward was so strong and because of the critical nature of where it was trading. So it's always about the conviction. Each trade needs to be taken on its own merits, Tuttle. But if there is any type of conflict with the timing of the scalp, the direction of the trade, or you're trying to fade a move, typically those will be a smaller position size, 100%. Tuttle, does that make sense? Good eye and great questions, man. Thank you, Michael. Yes. All right. Right on. Okay. So those are the two intraday scalps we've been following all week long. Again, we've got some plays at them, but it's been kind of rough, especially with the dollar performance that we've been seeing. So we're going to have to see if this holds. And again, we'll be looking to see if that finally puts in this base here. Did get some divergence on those last couple of lows. Okay, price action with a lower low here. Okay, the oscillator with a higher low. So this could be the magnitude of the bounce. I don't know. But broadly speaking, like I said, we'll try to stay constructive all above that median line off the high. All right, so that's Aussie dollar. Now let's get into the nitty gritty here. Some of the radar charts that we've been following from yesterday. Here's the Kiwi look like on the daily, and I just wanted to highlight one major thing on this. You had that 68.75, 69 level. We talked about that for months. Okay, huge lineup of longer-term fib extensions, both off this year's high and a multi-year extension here at 69. That 50% retracement dates back, I think, to the 2007 lows. Long story short, the rebound off the lower median line parallel was coming into a major key area of resistance. And here's what the Kiwi looks like on the daily at this point. All right, so this is the resistance range in focus. 3/4 of the scalp is now off the trade, guys. I did leave a quarter of the trade on. Our stops are well in the money at this point, so I'm not really worried about if we get the kickback. But if this does extend through, you could see a pretty hefty rally really quick, near 70, 70, 37. The momentum trigger on the daily is poised and ready to go. Until that breaks, there is no conviction, okay, that we're going to move higher. Raj, it looks like you're in a rush for that Sterling Kiwi. I will jump right into that as soon as I get this Kiwi out, okay? So until we do that, you want to be trimmed right here. If you're not already long, there's no position for you here unless we break. And if we do break higher, you look to buy the pullback near term. Here's the scalp looks like. Again, as he came into that low, momentum held 30. There was a nice momentum trigger here, on the 5-minute chart that got us in. Our entry was actually right here after the close of the webinar yesterday, this thing came right back into that soft support, 68.50. And again, the momentum trigger in combination with the Asia lows, with the European lows, gave us a very good risk to reward initially. Topside break, we looked to get out. Initially, we got out at a little bit of it right around that 69 handle. And then we closed the rest out a little bit higher near 69.17, an overnight trade. The rest of the trade is still on, a quarter of the trade, looking for a stretch into that upper median line parallel. Here's what the 5-minute chart looks like for the Kiwi. All right. Oh, and whatever, the arrows there. All right, so I'm not really a big fan of, necessarily going over the trades like this, but let me just walk you through how this panned out. So yesterday, at the close of the webinar, we were setting up a really tight U.S. opening range just here. The opening for the market saw this thing tumble. Again, we saw a nice dollar rally on the back of decent data there as far as the GDP numbers were concerned. And there's that momentum trigger. Okay, it was a 3-point trigger, even gave us a 4th point here before the final break. And as far as your stop, you had the Tokyo low and Sydney lows right there. So trigger break to the upside, sure. Once we made it through some distance, wait for the pullback, get it back on the long side. You got a nice trigger momentum, stop against the lows. You're looking for about 24 pips per scalp. Okay, this doesn't have the initial exit, guys. The initial exit was literally right here on this stretch into that upper median line parallel. Again, be dynamic with your analysis. As you're even on a 5-minute chart, draw some trend lines. Give the market some slope. Try to give yourself some guidance as we move through the charts, right? Obviously, the 30-minute is what's going to dictate our major key levels and where we're looking to play. But even on near-term prospects, we want to be dynamic with the analysis. So we got out here. The gain, I think, was 28 pips. We brought the stops to break even. You got to pull back in price. Watching momentum. Momentum holds 40. Moves up. Once we finally made a break through this median line, which we got out earlier on, we tacked on this one. And again, took profit again, 50 pips on there, right? Momentum is coming into the highs. Again, this is not necessarily where you want to get out of the move just because it's an overbought condition, but we're at resistance. Very simple. 69, that's what we've been highlighting here, right? So you're out of the trade. Take another piece off the trade. Again, remember, we're looking for increments of 24. So every time you achieve 24, 25, 26 pips, we want to do something. We have to react. Okay, that's our discipline. We got to stay disciplined to the strategy. So a couple hours later, you got another drop. It held 50 on the rally here. We started to do something interesting, and that was put in some divergence. Momentum made a lower low. The oscillator the price action made a higher high, or excuse me, a lower high. Price action made a higher high. Okay, and even with this peak and this peak, that's divergence as well. So I'm seeing some divergence in price. Actually, on a 5-minute, the 5-minute, looked like you had a near-term trigger that gave out right here. It didn't happen until a little bit later. But long story short, we're still at resistance. We're seeing divergence in momentum. I'm going to take off another quarter of the trade. So now we had only 3 quarters left, and that's what we're 3 quarters taken off, only a quarter left, and that's what we're holding right now. Again, that exit was in yesterday's trade, guys, so the platform doesn't show you exits for the previous day. This is just, since the close of market yesterday. So, again, with a quarter of the trade on, we'll see if we can get that stretch into 69.40. But generally speaking, that's how we've been working this scalp. The swing low that we made here last night. Again, this is the Asia pack low. Here's the Sydney low. The stop is just below that. And again, that's well in the money at that point, so already guaranteed. 15, 16 pips on that last quarter. Questions on the Kiwi dollar. And this is how you want to play, guys, a move like this. Obviously, it's a really strong downtrend. If we look at this on the broader scale, I did include the chart here on the radar chart. We've been holding this formation for some time. Okay, for a long time. Let me snap this right here. From the highs here. So obviously, we're fighting a strong downtrend. This is sort of a nice reversal in your term that we're seeing in momentum. The last time we saw something like this was right here, and that actually offered a really nice spout of long scalps to the upside. Long story short, this is what we need to clear on a little bit more of a conviction basis to see that run into 69.40 on the upside. Okay, and then that's a swing low from that week closing on the 12th of June. Tuttle says, this is incredibly helpful trade management info. Tuttle, I thought so. And Ty, if you're in the room, I kind of wanted to bring this up for you as well to kind of gauge, how we're working through these levels. So we'll try to see if we can get that upside. Any questions here on the Kiwi before we move on? Eileen says, yes, I like talking about how to manage trades. That was great. Cheers. Mark says, I've always had a hard time to take profits. Ty says, thank you. That does help a lot. Right on, Ty. And again, I'll be in touch, my man. Super hectic during the week, but I promise I'll get back to you. Mark says, greed. So here's the thing, Mark. I completely agree with you. There's two things. The hardest thing in being a trader in general is holding on to a longer term position as it moves against you if you have conviction on the broader move, and B, it's knowing when to take profits, right? As Jamie would say, sometimes the entry is the easy part. It's really knowing where to get out, the timing of how to get out, and when to sort of cut the umbilical cord on the bias. With this type of strategy, guys, we cannot fall in love with any bias. Ever. Okay? We can flip long to short on a flip of a dime. Okay? We have to be that flexible to be able to trade intraday. As far as where to take profits, this is here for guidance. And like I said, guys, you don't have to close the entire position, but something's got to happen. And that's just something I found over my career to be exceptionally helpful in trades that were beautiful and that were, right at the quarterly ATR, right where I want them, but I think there's so much momentum on it. Great. I'm just going to hold this one, right? Market comes back, retraces, you're stopped out. Now, even though the trade was a winner, you haven't had any profits, you stopped at break even, or even worse, a loss, right? So the best way to avoid that, and the way I've been, operating over the years is just, as soon as we start to hit the initial resistance targets, the initial profit targets as far as the volatility is concerned, we have to do something. And the best thing that I'd love to do is take off a half, a quarter, a third, whatever the conviction is on the trade, bring the stops tighter, if not to break even. As soon as we attain another quarterly ATR, that's when you got to pull your stops into the money. And in this way, even if the market retraces and stops you at break even, no problem. If your bias is still as such, look for another entry, right? Maybe get an entry even lower. So I hope that you found this helpful, guys. And again, I thought this would be sort of something that a little drill that we could do here that'll offer some clarity here for Ty and also for some of you guys that might have some questions. All right, I'm going to jump really quick sidetrack for Raj because it looks like he really wants to look at the sterling yen, or sterling kiwi rather. So here's sterling key. Okay, I think you asked about this last couple of days, right? Okay, so that support, that same region that we blasted through, the 2220, what is that, 2227, 60, is still the level that we need to close this region right here, close below to get the conviction for a little bit more of a reversal. I'm not sure what you're on this, Raj. Are you on the short? Oh, so says I'm short. As it's testing the median line on the hourly. Okay. Essentially, before I look into the hourly, Raj, the daily is the first thing I glance at. And you'll notice even my analysis here when I'm reviewing with you guys starts off with the daily, and then we pull into the short term. And that's because we need to keep a broader view of what the larger encompassing picture is doing. And if you look at this right here, well, there's a trend line, resistance, or a really nice pivot line here. Support, 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 4 times break, resistance, break, now it's support. Okay, so I would be cautious about short exposure until you find a close below this. And the other thing I want to mention to you is, remember, as long as this thing stays in overbought condition, Raj, it can continue to stay here, man. This is when the market has the most strength. As you can see here, don't take my word for it, right? If people started fading this because we were in overbought condition, they would have gotten smoked. So we want to make sure we know how to read these. And again, it's the cross below 70 that would give us a near-term pullback in price. As long as this stays up here, I'm not really interested in trying to be aggressive on the shorts. Let's jump into the near term for that point and see what we're looking at here. So obviously you can see I haven't been necessarily following this trade very closely. So let me see if I can offer some guidance for Raj here. I guess that's the median line I'd be working with. Um, okay, momentum looks pretty good in your favor, sure. But we don't have any key levels mapped out. So before we get excited here, let's just tack on some retracements and see where we are. Wow, okay. Perfect 38, 236 bounce there. See that? And bear with me again, real quick. Just want to take a quick extension off the high and see if that yielded anything. Okay. Okay, I'm just gonna leave that 50 and that 618 major key fibs here that could offer some rebound if we do get the break higher. I'm not gonna lie to you. I'm a little concerned below this median. I'm sorry, you're on the short side, right? My stops are above the previous swing high. So this high right here, Raj, 120, 228.32. Okay. Okay. Okay, a wider range scalp. So as we were saying before, this is a quarterly daily chart. Gives you 65 pips on this, Raj. So it is a wider range scalp. I don't necessarily have a trigger that's given out yet. I do want to watch this. Looks like you've gotten 3 tags there already on that one. And let's bring up the 5-minute chart real quick and see if we get anything similar. This is Sterling Key. Not bad. Okay, so when you see the market coil up like this, I tend not to want to take a position until that coil breaks. If you are trading this, you can trade within the zone, within the confines of this little consolidation, right? Lower high, higher high, or higher low, excuse me, higher low, higher low. This is classic consolidation here. So if you see the top side break take you through this median line, you could be in for a decent rally here. And since we're holding Kiwi longs, I favor your trade working out. Okay, I favor this holding this resistance and moving lower, just because that would be further Kiwi strength. But in general, this is sort of what I'd be looking at. So taking a trade, Raj, even if the risk reward is there within this consolidation, for me is kind of really too close for comfort. If it's a really tight stop, maybe against the opening range highs for Tokyo, opening range highs for London, sure. 30 pips on the upside. All right, you're looking for 65 pips. Anytime you can improve your risk to reward, I'm with you. But you don't necessarily have a trigger even on the 5-minute yet, and that's my issue. So stops at 228 would be better, I guess. If you're taking it as a scalp, right? Because you're trying to call a turn. Again, this is the same type of issue we're talking about with the, with the Kiwi that we were just looking at. At the end of the day, you are with the direction for the near-term trend. I like that. The momentum signatures continue to hold 60. You've seen multiple 40 breaks. I like that. But still, remember, I need a trigger or something to put me in. And unlike the Kiwi, which was at an extreme, right, at a multi-year low, we're not really at that same type of extreme here on the Sterling Key. That being said, yeah, as long as you hold below the median line, you could see this thing turn over, but I'd still be looking for this 5-minute trigger to give out. To give us a little bit more conviction on trying to hold that short. Mark says Kiwi strength, yes, but I'd be more weary of the sterling strength. So sterling dollar, we can segue into that. First of all, Raj, is there any other questions on this trade, man? I want to make sure that we've answered your question here. And be mindful again, if this breaks 60 to the upside, the momentum signature, although on the 30 looked pretty good, right? Since we made that low and blasted through, look what's been happening. We found support at 40. That's suggestive, not necessarily conclusive at all. But also on the 5-minute trigger, right? Ever since the low we made last night, not necessarily in price, but in momentum, what's happened? We've seen a 60 break, which shifts a little bit more toward the upside, but on the pullback, 40 hold, 40 hold, 50 hold here. So you want to be mindful of this trigger break to take you out of long exposure. This would be what you want to see, Raj. And if you see a 60 break here, and specifically a break above the Asia Pac highs, I'd be very mindful of trying to fight that. And again, remember, guys, it's a wider range scalp. So if you're newer to the strategy, you want to kind of pick pairs that have a little bit lesser of a volatile range, just until you get in gear as far as getting the real mechanics of it down. Raj, does that help? He says, thanks. All right, cool. So let's jump into the British pound and take a quick look there. So here's what the sterling dollar is doing. Again, you might have noticed, or you might have seen that piece I published on sterling earlier in the week on Daily FX. I linked it here on SB Trade Desk as well in the radar charts yesterday. I figured, Raj. I was hoping so. My pleasure, man. I'm glad to help out. So as far as the sterling dollar is concerned, the initial target for this short, which we were looking for against that major key resistance, 58.77, 59.40, huge region, but you had a lot up there stacked up. You had the divergence that you saw in the daily charts for momentum. On a closed basis, that 50% retracement was a rock solid resistance. Here's what it looked like on the closed basis. And, the initial target to the downside was the lower median line parallel was 157, 156.98. A nice level in price. And also, what was it? Oh, it was a swing high here from the 21st. Okay. We closed literally right at that level yesterday. Probe below, we got pretty deep, but we closed right at that level. So near term, I'm going to go ahead and wipe off that short exposure or that short bias. This was the major target that we were looking for. Excuse me. And the sliding parallel of that same formation that we highlighted earlier in the week caught that low almost to the pit. Okay. Here's the momentum signature. Divergence into the lows. Okay. And the trigger break. Oops. Looked like this yesterday. And on that pull, I jumped into some long exposure. Off 57.50. Oh, this was the long exposure yesterday. I'm sorry. So here's where I got long. And again, this is a perfect example, guys, of what you don't want to do. We were coming into this median line support. I'm thinking to myself, well, this median line structure has been in play for so long. If the sterling is going to find some sort of support, this would be good as any. I was looking for a break of the U.S. opening range. So here's the 830 slot, really tight opening range here. It looked like it was breaking to the upside. I tried to front run a break of the median line and failed. So the stop was pretty tight. It was only a 20 pip stop, but nonetheless, I jumped the gun on this one, and the long exposure got stopped out pretty quickly with the break below that median line. Haven't touched it since, but sliding parallel, catching the lows here, momentum back above 50, back above 60 on this break, but we are at resistance, 57.50. It's the exact level I got long in yesterday. Now is resistance. Again, to validate the broader turn, this is sort of the level I need to see broken, is this region right here. This is the May high day close, 38.2% retracement off the highs, and the upper median line parallel, all stacked up right here, 57.70, 57.66. So, Tuttle saying, Sterling just found resistance with the 618 of the daily range. Let's check it out, Tuttle. Here's the 5-minute looks like. Yeah, so yesterday's trades get taken off this, guys, but here is essentially the US opening range. Here's where I went wrong. This was the trigger I was looking at. Okay, 57.50. I thought I saw that trigger give out. As soon as I saw that this thing held 50, okay, and that it held a basic trendline resistance off the high, we kind of sat on it and broke right back below. I could have spared myself some pain and gotten out at a 8 pip loss, a 10 pip loss. Again, you can't micromanage the trade like that. Long story short, it was a bad entry, and at the end of the day, we should have been a little bit more careful on that one. At the end of the day, here's where we are now. And at this point, you're holding 40's momentum. You're seeing multiple 60 breaks. Price is at near-term resistance, so I don't necessarily have a play for New York trade here. But you do have some triggers that could be in play. Okay, I don't have enough conviction to trade this sterling yet on or to try to attempt to get back into a sterling position here, Raj, or anyone else who's looking at the pound in general. I kind of need to see that 57.70 barrier give out to the upside for me to be comfortable trying to take the longs. At the end of the day, here's what the daily chart looks like. We need to kind of clear this level. Again, we've been looking at 57.70 irrespective because that was the high day close for last month. So inherently, it's going to be a level that we're watching. Also, the upper median line parallel is right around that region at this point and former median line support. So it's kind of stacked up here. I'd like to get back into this to try to favor the long side again. That being said, take a neutral stance here, but generally looking to buy pullbacks in the pound while above this region here. All right. So really nice pivot in price, median line off the high. If we get a pullback into US trade, this might be a nice entry. This is going to be our near-term bullish invalidation level. Here is, just want to make sure, yeah, okay. Any questions on the British pound? Okay, let's move on into the dollar yen. This is the other one we were in. We'll take a quick segue into commodities and even look at some indices real quick. And then, guys, any questions, trade setups you want to review, feel free to throw them on the message board now. We'll squeeze them in before the end of the session here. So, dollar yen. Another one, I took a few stops on this one, actually, before it panned out well. But here's what dollar yen looked like yesterday. First of all, the daily. So, really clean on the levels. 124.35 is what we were talking about in the webinar yesterday. If you guys remember, for some time, that's going to be a really nice confluence region of the 2007 highs, the 1618 extension off the lows from December. I did put a piece on this on Daily Effects as well. I noted that in yesterday's scalp. Here's the major resistance region we were looking at. Okay, you had the 1618, like I said, the upper median line parallel, the June 17th swing high, again pre-FOMC here, and momentum was holding below 60 on the daily chart. Still looking lower. At the end of the day, this has been the range since the 10th. Today's the 25th, guys. Right? So irrespective of what your broader opinion is, irrespective of whether you're buying all this nonsense with what's going on in the headlines, it's a range. You're testing range highs. So inherently, you're looking, momentum seems like it's turning here at 60. I'm generally going to be looking lower against this region. Now, again, from the scalp standpoint, this is the median line structure we highlighted yesterday in the webinar. Okay, and on this rally, let me see if I have, oh, it's not going to be in the charts. Oh, I took a picture. Right, let me get this for you real quick. Okay. I knew I saved it. Awesome. I even made some annotations for you here, guys. So here's what the scalp looked like. This was actually two stops that I took on this trade, as we came into 24.14, I added to the short. Okay, that's that 50% retracement that we were holding just under. Okay, so there was a short that was triggered in overnight trade. Again, I had the limit down at this median line down here. We obviously held that 23.75 level. That was a 38.2 retracement. We saw a rebound. As we came back into this region, a 5-minute trigger gave out, or it looked like it had given out. Again, I front run the break again on this one. You saw some divergence as price pressed into that high, so I added to the short another position. It was a light position to begin with, because obviously we're fighting the trend, right? So it was initial position size to begin with on this short. We added again at 25, and we got stopped out. Stop was just above that region. We got stopped out pretty quick. So average loss was 27 pips. No biggie. We came right into 124.35, which was the key level that we highlighted yesterday in the webinar. And obviously it's going to be the better entry here. This is the 1618 extension off the low. Okay, this region right here, off the December lows. And another support trigger gave out at the highs. I didn't get to catch the initial support trigger. Again, on the rebound into the high, now you're making divergence, right? I'm sorry, not divergence. Now you're holding that same trendline support as resistance. Jumped into a short. Stops were just above the highs. Again, we're looking for about 25 pips on this scalp, right? It was running. So at the end of the day, kind of held it for a while. We took out initial target at 37. Gave us another pop, and into the drop momentum here, holding 30 as support on the 5-minute. We went ahead and closed out the whole position. Obviously, this is a cherry pick, guys. I mean, this is something you're not always going to catch the exact low. Worked out pretty well, and then it broke to the upside. This was panning out yesterday as I was publishing research for SB. I obviously missed this trigger, but I just wanted to show it to you. Here's the Sydney-Tokyo Open. Okay, the Sydney Open is in blue. The Tokyo Open is in dark blue. The opening range low held deep into the session. Okay, then you got a clear trigger break in momentum and a break in price. And again, that was a pretty tight stop against the opening range high. Looking for about 25 pips would have panned out perfectly. So, keeping in mind that we need to keep the intraday picture in view, and the fact that, I'm always going to be willing to take profit at the daily ATR. I'm always going to be willing to take profit, at support. But that doesn't mean that trade is over. If the market rebounds, you simply look for another re-entry. Okay. A lot of people will say to me, well, Mike, I don't understand. What's the point? If you got a great short entry up at the high, what's the point of taking 50 pip profit? You could have taken 100 pip profit if you would have waited for that 23.60, right? But that goes to the comments we said earlier in the session, guys, and what Mark was alluding to. Sometimes it's very hard to take, it's the hardest choice to make is when to book profits. At the same time, we have to stay disciplined. What this allows us to do is a couple of things. A, this entire overnight session here, I was not exposed to any risk. I don't care if the BOJ said this or, some Kuroda said this, or all of a sudden, when the Fed central bankers throw out some comments, you see a 50 pip spike that doesn't change anything but comes back. I'm not exposed to that risk. It's the benefit of our strategy. And with the same respect, I don't know that this is going to break to the downside. Maybe this would have held support and just launched right through, that 50, what was that? That 123.75 target again. In which case, I'd be looking to buy the pullback. I'm not in a loss. So, be nimble, be willing to change your bias as the market evolves, and be willing to take profit and jump right back in. If the directional bias still remains, momentum held 60 on the bounce, even on the 5-minute. You got a clear trigger in price. You got a great stop against the opening range high. This is an ideal scenario. So again, I hope this offers some color, guys, as far as how we're walking through these steps and how we're really the mechanics of taking each scalp. Do you have some alerts, or do you just scan all the charts 5-minute every day, every 15 minutes? LOL. No, I don't look at the 5-minute mark at all unless I'm deciding to operate on the chart. So I'll be looking broadly I'll take a look. First thing, I'll broadly skim through the daily charts. Of those charts, the ones that are at key levels, or the ones that have clean technical clarity. Of those, I'll jump into the 30 minutes and see where positioning is. And then if something comes into view, I'll have a couple of 5-minute charts, maybe 3 or 4 5-minute charts just on my screen, on one of the many screens, and we kind of just gauge and look for the opening ranges and for those triggers to happen. But Ty, as it pertains to your question that you asked earlier in your email as well, how do I know if I'm looking at too many charts, or how do I know if I'm looking at too little charts? That's just going to be a gauge on how comfortable you are with the market. Okay, there's two things I don't want to encourage. A, trying to cover too many pairs, and that's our job here at SB, guys. That's what we're here to do. We're here to scan the markets, cherry pick the levels and the setups we think are most have the most potential. And then you guys just focus on the highlighted setups. If you're trying to focus on all the pairs, or you're trying to do analysis like me on this, it's going to be very difficult because you're going to have so many setups in play that you're not going to know where to look every day. So I would say pick 1 or 2, 3 pairs that you're comfortable with. Pick 1 or 2, 3 pairs that have technical clarity that seem to make sense, not crazy ATR, and focus on those. Okay, and of those 2 or 3 setups, you want to cherry pick which ones you're operating in. Guys, I'm obviously not in Kiwi dollar, dollar yen, sterling dollar, Aussie dollar, and euro dollar. There's no way I can effectively scalp all 5 of those setups, right? But they are in view. They do have clean technical clarity, and they do have clean levels. So I got to cherry pick where they are in price. So try not to overwhelm yourself. That's one thing. 2, there's also, I've talked about this here once before, paralysis by analysis. So if you have too much on your chart, guys, you're looking at RSI, stochastics, trend lines, median lines, fibs, Donchian channels, whatever, you're going to get too lost. There's going to be too much on your charts. And sometimes I feel like I have that issue here, but as long as you're able to be objective as you can with the levels, that should offer you some assistance as well. So that is dollar yen. Any questions on that? Tuttle says there was a London opening range break and RSI break that I took a short and got 30 pips. 36 pips. Right on, Tuttle. Dollar yen this morning. Nice. Nice. Yeah, let me bring up the 5-minute chart of the dollar yen. Absolutely. Great trade. My man, that's the exact same setup from last night. Right? So yesterday's opening range, Tuttle, good eye, man. Here's yesterday's opening range, what I just showed you in that example. Right? The opening range for Europe was right here. Not Europe, I'm sorry. The opening range for Tokyo, Sydney was right here, real tight into midday in Tokyo, that break. Tuttle noticed the same exact thing in London. Here's the green London open. Okay, you got a real tight opening range, couple of hours into trade, that breaks, stop against the highs, looking for 25 pips, got a nice drop, real nice. And a trigger break, right, Tuttle? The trigger break actually came before price, so I'm not taking the trade based on this. I'm taking the trade based on the break of the opening range low. And this is just further conviction, right? In fact, the opening range low break happened with a break sub 50, which a lot of times in and of itself will be a trigger. All right. Well done, man. Well done. And like I said, the U.S. opening range has actually been the least fruitful. I found heading into the European close is 90% of the trades that I took. We can take, here's the scalp log. And again, I don't want to make a habit of showing this every day, but here's yesterday's scalp. So despite the losses that we took on the dollar yen, despite the losses that we took on the sterling. Sterling loss was a 20 pip loss. Dollar yen was a 30 and a 20 pip. Again, that 30 pip was a little bit larger of a trade size, so we averaged a 27 pip loss on that one. We still ended up with 150 pips on the day. And that's because, if you look, all our gains are bigger than our losses. This is something that if you can't look back at your trade, guys, you're not going to be able to really assess what's going on. All the gains should always be bigger than losses on scope as a whole. But that's a dynamic that's going to hold pat in every single strategy. Keep in mind that these 3 Kiwi trades were all in the same entry. So I'm not trying to fool you by showing more pips. These were all in the same entry, but we got out at different times. And again, a quarter of that trade is still open. So on the day, you probably end up here if we close it with another 50 pips or so at 200 pips on just these. There are 8 trades, guys, but there were 4 entries. Okay, and there were various exits. So, Ty, back to your question, how many trades should I be placing a day? Am I trading too little? Am I trading too much? This is an active day for me. Yesterday we had a lot of technical clarity, a lot of real clean moves. So it was a day where I got 8 trades. Sometimes that could be 15. Sometimes it'll be 0. Okay, it's really based on what the market's doing. The market will give, and that's what we can take. The market is not offering anything. I'm not going to try to take something because I'm looking to get into a position, right? It's got to be there. So, Mark says Tuttle FX has got it down with the MB money making machine. Tuttle, Mark is giving me some props there, my man. So well done. Show the trade sizes. Yeah, Mark, I'm not going to do that because I don't want to set any expectations, man. Listen, I don't care if you guys are trading with micro lots, mini lots, standard lots. I don't care if you're trading a yard at a time or if you're trading, a yard is a position of $1 billion, by the way, or if you're trading, a couple of micro lots. That's irrelevant, Mark, and I don't want to set expectations for anyone. So just make yourself very comfortable with trading in increments. So whether it's 5 standard lots or 4 standard lots on the entry and you take off a lot each move, or whether it's 4 micro lots on the entry and you take off each move, I try to trade in increments of 4 so that I can take off a quarter, if I can take off a half. Sometimes I'll trade in increments of fifth. So I'll trade, a multiple of 5 where I can chip off 20% of the trade every time I hit a target, right? It's all based on the technical merits of each setup. And the more conviction you have on that trade, the better the trigger, the better the conviction you have on the broader bias. That's where you're going to up it in that multiple. And in that way, it makes it much more dynamic for us to be able to chip off at the trade, bring up our stops, and sort of ride the swing. One thing I just want to go back and say real quick. You don't want to be doing something like this in a market that is range bound. Okay? Or excuse me, you don't want to be doing something like where is it? The Kiwi. You don't want to be doing something like this where we're holding on to the position in a market that is range bound. The Kiwi has obviously made a huge low. We're looking to play the upswing. If we break that major key resistance, it's likely to see a lot of upside. On a trade like that, yeah, I'll chip away, bring up my stops, and let the market run. It's always going to be better to ride your winners and cut your losers early. In a trade that's range bound, or a trade that doesn't have all that much technical clarity, like in dollar yen, okay, something like this is where you want to be all in, all out in the trade. So I hear what you're saying, Tuttle. Was that you? I really like the drill down and what really happened, says Eileen. Cheers on that. Um, so Jay Jackson, you're the one who said it. He said, I took Tuttle's trade also, but didn't take profit and now regretting it. So you see what I'm saying, Jay Jackson? In a market that's range bound, you want to get all in, all out. Okay, if you're trying to play the breakout, that's cool. You still have to operate with the same premise of our strategy. So, put your stops or take a chip off the trade, Jay Jackson. If you still think it's going to go, man, there's no problem with leaving some on. But we need to take profit and put some in our pocket. Why? Because the original trade you took with Tuttle there on that opening range break was phenomenal. It was a beautiful entry, right? Where's the live chart? It was a beautiful entry, right, of that opening range for Europe. So you were right. The trade, the trigger was there. The setup was there. You had a great risk to reward. You got to make sure that we do something. I'm not going to take a loss on this trade. I was right. So take a position or take a portion off. Bring your stops to break even or better, and let the trade pan out. If you get the break and it keeps going, Jay Jackson, more power to you, man. More power to you. If it doubles back and stops you out, guess what? You took some profit, no loss on the trade. We'll look to get back in. And that's the way you got to be. It's nimble is the name of the game when we're intraday trading. Mark says, I was kidding. We never talk about money, only pips. Right. Yeah, trade size is so discretionary, guys. I don't even want to set expectations on that. someone might look at my trade size and say, wow, you're absolutely crazy. Some of them might say, hey, you should be more aggressive. I don't know. And that's completely a subjective thing. So I hope that that's clear on that, Mark. Ty says, okay, you're answering so many things I've been wondering about. And Ty, again, I want to encourage you, man. I want to encourage all of you guys. Your feedback is absolutely paramount. Some quick housekeeping before we wrap things up here today. Guys, great news. IDO is on the precipice of being ready to go and ready for launch. We're really excited and looking forward to that. I've been negotiating, price, and we've been wrapping up all the last sort of loose strings to get them up and running. Hopefully less than a month's time, that'll be available. Again, I will get back to you on the exact pricing on that. It's going to be less than we anticipated. So, it should be a nice upgrade that you guys can have to the account to give you a little bit more clarity and point you out in where you should be looking. So, a lot of guys were asking today, where do you know where to look? Where do I know what I should be shifting my attention to? IDO is going to be a great tool that's going to help us because essentially it's going to highlight top performers, worst performers, percentage gain, percentage loss on X time frame. So it definitely will be a nice tool to help us narrow down throughout the course of the day where we want to be looking and throughout the course broadly on the larger scales. So that will be coming. I will give you more information on that. Some of you who have been with SB from the launch date will have free access to that. So I will be getting in contact with you as well. And we're looking forward to it. So I know there's been questions for the last 6 months when they're going to be coming. They will be coming on board soon. I'll keep you updated on the homepage for SV Trade Desk. So, guys, I hope you found this webinar fruitful today. Feel free, as I always say, to keep out any other questions or send me emails with specifics that you might have. I'm always going to try to address them here, guys. I'm horrible with email. I have hundreds and hundreds of emails, both from the Daily FX side and SB a day. So, 90% of it's spam, to be honest. But still, emails is going to be the slowest way. So I'm always going to try to address them here in the webinar. So we will, pick things up back next week. Right before we close, I want to take some quick glances just on some of the commodities. Gold, guys, we closed below the median line parallel. Or the lower median line parallel. I noted on the intraday page the necessity to close below last week's low here to really get the validation. Yesterday we probed below it. We tagged the exact low from May, but we didn't close below last week's close. And here we are making another attempt. Watch today's close. I don't trust this thing. So that's why I'm going to continue to maintain a neutral bias. Even though we've broken down to the downside here, I don't really trust it because of what's happening with the dollar. And generally speaking, we've seen this price action before, right? This pop up, pair the entire move, go higher, pair the entire move. This drawback obviously completed a retracement, but was a much steeper retracement, pair the entire move. So range is the name of the game for gold. And until we clear this range, or specifically a more conviction break below Friday's low or below last week's low, I'm not really going to be favoring it. Broadly speaking, you're at risk for a little bit more of a pull lower for momentum to tag 40 and maybe see another 63 print here on the lows for the month. So a little bit hairy here on gold. The only thing I did love was the reversal we got. This was a key region, 200-day moving average, 618 retracement, really nice hold there. Did I expect it to get down this low? Not really. And again, it's a range, guys, plain and simple. So use caution on that. Some other commodities, real quick, that we've been looking at is, by the way, dollar index. See if we can break that support. 40 break. This will be the first 40 break of the week if we settle down. This stretch low is 36, so let's see if we can beat that low there to get the conviction. But some of the other commodities that we look at, what is this? Dollar yen. This is something that me and David Song were looking at. Gold, silver, or this is silver rather. We broke that trend line off the March lows. Yesterday came right into that 7.6 retracement again. 786 retracement, and that's a swing low that we made here on the 30th of April as well. If this gives out, guys, there's really nothing in tap. Maybe 1560 the lows, but you're essentially looking for a drop right back into those March lows. So, like gold, it looks like we're in a nice little channel formation there, and we'll watch that as well. On some of the indices, the German DAX, I just wanted to highlight this major key resistance level as well. Some of the guys were putting out some research on this yesterday. just wanted to point out these median lines, guys, have been super clear here, super clear for the DAX. So we got a break of this upper median line parallel earlier. I guess it was on the Sunday open, Monday. That rally right into upper median line parallel. This is a longer dated upper median line parallel as well. Confluence region with the 100-day moving average. Key resistance here for the DAX. So those of you who are trading some CFDs, be mindful of that. I know everyone's calling this an opening range break for the month, but remember, nothing supersedes basic support and resistance, okay? I don't care if it's an opening range break, RSI trigger, whatever. Basic support and resistance will always be paramount, and I want to be mindful of any long exposure as long as we're below that region. Okay? Guys, that's going to wrap things up for webinars this week. We'll be back on Monday. Remember, public webinars on Daily FX on Monday at 8:30. Again, here on SB, Tuesday, Wednesday, Thursday, all through the week at 8:30 as well. Be nimble heading into the end of the week. Remember, last days of the month. The month ends on Tuesday, so we'll have a webinar on that last day. But remember, heading into the end of the month, heading into the end of quarter, you might get some rebalancing and sometimes shifts around, some of the technicals and can really fake you out intraday. So just be mindful of that. But we'll pick things up back next week. Have a great weekend. Best of luck trading, and we'll see you then. Cheers, guys.